For the benefit of those who may be watching it online, I wish to run it parallel on Facebook. So we are good so far. I would like to walk you through this statistic that we just received from Toronto Regional Real Estate Board, in which, if you look at this carefully, you will notice that there are, in April 2021, there are 13,663 transactions, which is 362% higher as compared to April 2020. This is a phenomenal number, such an increase. But now you will notice that when they did seasonal adjustment, you'll figure out the transactions actually fell down in April 2021 by about 19.7% from last month. That is March over April, there has been reduction in number of sales by 19.7%. On the right side, the total new listings went up 237% compared to April 2020. A phenomenal increase, but at the same time, you will look at the sales to new listing ratio has gone up to 66%. It is still not higher. 66% is pretty good number. When this is a ratio, people still get an option to bid on, put an offer on a property with some conditions in it. It is, of course, seller's market, but still there are options available. So the average selling price, if you look at that, in April 2021, it was $1,090,992 compared to $820,000 nearly in 2020, the same month, which is 33% increase from last year. And at the same time, the price fell down by 3.6% from last month. So this is what is going on. And for those people who are still running behind their home purchase, don't you think it is extremely difficult purchasing a home under these circumstances? The prices are through the roof, 33%. Does your salary increase by that percent? It does not. We can all testify to that. It is barely increased to meet your change needs. But now I would like to come back to a little presentation that I have created for you, which is about another alternative means of home purchase, and we call it as co-ownership in real estate. I guess the name itself implies what a co-ownership is. It is owning a property together. It could be two families, it could be two friends, it could be more than two people. It could be arranged in so many different ways. And one of the ways that I'm going to discuss discuss how it can be set up will follow these coming slides. So make sure you are watching it closely. For those who are unable to view it, if you guys have registered, you will get a copy of this presentation via email delivered to your inbox very soon. And you can watch it at your, whatever time suits you. So what is co-ownership? I gave you a bigger picture of what co-ownership is. Let's delve into a different scenario. So co-ownership is basically, it can be a corporation owning the property with different partners. It can be two or more families or friends or anyone that you know of. It is kind of shares. If you have ever heard about cooperative ownership, it could be kind of similar, but it has little more variation in that. So which is, and when you buy as a co-owner, you can always split the price. Not only that, you can buy in certain areas. So coming to this next slide, which is benefits of co-ownership. It is affordable because now there are a couple of families who pitch their money together to buy some real estate. It is kind of equity partnership. Your money will never grow otherwise unless you have a house. So now when you buy together as a co-owner, the house price freezes for you. Whatever increases is your equity. And then it also adds some stability to your life. So three key benefits from house ownership or co-ownership is affordability, equity partnership, and stability. Who doesn't want that, right? The benefit of co-ownership are also that you can buy a property in an area of desire. Like there are certain high-end areas. There are certain areas where people want to enroll their students because of high perceived value of educational standards in certain schools, or least crime rate, or proximity to work. Even some families who are working in the same establishment may choose to buy one property. So this is the desirability of co-ownership, that you can buy your house closer to wherever you want. It gives you more flexibility in choosing your area of choice. There are different ways co-ownership are set up. One could be an occupying co-ownership, in which everyone who owns a property, a piece of property, or a share of property lives inside the property. We call them as occupying type of co-ownership. And then it could be non-occupying. The person may just put some money into it and they can rent out their space to anyone of their choice. And hybrid. Hybrid, as the name implies, is that sometimes they occupy, sometimes they lease out. It's kind of timeshare, right? The structure of co-ownership is really of great importance to understand. Of course, I am not a lawyer. I'm not talking from a legal perspective. But what I can suggest you is speak to a lawyer with the knowledge you gain after this webinar. Co-ownership can be owned by a corporation, cooperative corporation, or condominium corporation. Set up the way you want to set it up. And the ownership could be joint tenancy or tenancy in common. For joint tenancy, the survivor benefit is already built in, which means if one of the partner dies, the property transfers over to the second living person. Okay, but in tenancy in common, if someone passes away, his or her or it or them's portion of the property A is given to their heir. It goes to kind of estate. So their heir can claim their portion, the deceased portion. This is how tenancy in common works. Any questions so far? Feel free to stop me. I'm sorry I can't be a bit louder because everyone here today is on computer. Someone attending class, someone meetings, and someone teaching it. So I'm the one sitting in one corner, not my regular corner, but I'm just using some space inside my house to run this presentation. Another important thing in co-ownership is that there should be kind of a setup about how we'll make a decision and how a decision will be made. It could be consensuous, it could be voting. So if there are two families, you can choose consensus, but if there are unrelated persons, of course, voting or consensus, either method could work, right? Those in favor of this thing, yes. Those not in favor of this thing, nay. Consensus is just kind of agreeing for a greater purpose or a bigger picture in mind. Of course, when you are buying property under a corporation, you have to define how you're going to use the property. Is it going to be residential, commercial, mixed use, or whatever activity, and how the indoor and outdoor common spaces would be used? It has to be defined. You don't know if you are in tenants in common, if those things are not defined, there could be troubles in the future, in the long run. So you have to set guidelines. It's like writing a bylaw about your co-ownership property. So this is what it is. And then rules may also address occupancy, use of property by guests, use of property by potential new residents. For example, if a co-owner forms a new relationship. So right now there is only one co-ownership. He is unmarried, single, then suddenly he marries another person. So now you need to define how the things will play out. Of course, this is their portion. Depends on type of ownership. Is it joint tenancy or tenancy in common? So be careful about those numbers or those terms. So there are financial and insurance needs associated with any property. So co-ownership real estate is not separate from all of this. So you have to figure out mortgage and property tax payments, sharing and paying operating expenses, funding major repairs and renovations, and how co-owners will maintain needed insurance. This is money, and everyone has to participate in it, right? So if there are no guidelines or by rules or bylaws in the document, then you know what? It could be chaotic. Let's go further into this presentation. Operation and upkeep. So you must establish duties and responsibilities for financial contributions, work, and time commitment. So that people understand that on this particular day, this amount is to be paid into a common account, which could be used for future upkeep of the property or any related cost, maintenance, petty repairs, major repairs, and then how this thing is going to be handled. Will you be doing yourself or you will be doing through some contractor? So you have to find out the work and time commitments for that. And there, when you run something like that, and there are more than one person occupying a property, there are going to be disputes about or counter blames or blames on each other. So you have to establish, remember, be mindful that if you go this way, you do ask for these questions. What are the rules for negligence or misconduct? So rules allowing co-owners to seek compensation if there is negligence or misconduct by another co-owner, such as breach of the co-ownership agreement. If it is kind of occupying co-ownership and someone starts leasing it, it has to be addressed because that becomes a misconduct. Okay. So what are the guidelines? What are the rules and regulations to handle that? How will you fix that up? Misuse of money held in common account for home operating expenses. Of course, if there are more than one person holding an account who can go in and cash out, there has to be a keen eye on every transaction. If there is embezzlement of funds, you need to find out and set up some kind of maybe penalty or recourse to address those issues. There could be other issues too, which you will find out as you grow doing Co-ownership. Certain things are beyond the scope of this small presentation. Okay, and the data is available online. I probably will give the link sometime later. And when there is a dispute, how do you handle it? So your document, the co-ownership document or bylaws, should also include provisions to handle disputes, right? You can save money that may go into extensive mediation or arbitration process, or you can also save it from lengthy court courses if you foresee certain future problems and try to build them in, or if there is unforeseen circumstances, you can all resolve within the co-ownership rather than running to lawyers and then paying thousands of dollars in legal fee and court fees. So make sure it is kind of little mini government inside that real estate property, and you can do it. So what are exit and entry provisions? So let's say a couple of families bought a property as co-ownership, and one of the family wants to exit. Maybe they are comfortable. They now want to take their equity portion, or anyone might want to buy out them, or there may be new persons who want to join your co-ownership. How are you going to handle that? Clear procedures must be in place when a co-owner leaves the co-ownership arrangement and when new people enter. Make sure you know what and how to handle it. So rules for people entering the arrangement could include the role of other co-owners in approving a potential new co-owner. Something similar goes up in cooperative housing. There is a board that determines if this person is a good mix into the crowd. If yes, then you are allowed. It could include meeting, it can include vetting information and seeing financials and responsibility of the new entrant. The provisions that you will plan should include a process for new individual or families to enter and leave the co-ownership arrangement as well. Because you can't have a grumbling person in the co-ownership. If they want to leave, let them leave, but how they will leave? A penalty for terminating, or you just let them go. Define that in the documents. Use a lawyer for drafting co-ownership agreement. What to do in the event of death of a co-owner? Like I said, if joint tenancy, it passes on. But to whom if there are more than one living co-owner in joint tenancy? Maybe a share split. Again, something you need to ask a solicitor. And determining the fair market value for a co-owner's share and or a house. So of course, when a new entrant comes in, you will take money from the person, and when someone leaves out, you may have to pay him some value for the part of the property he owned or she owned. I'm sorry, these days we have different addresses, but the way my mind is set up, no offense to any gender at all. So this should also include rules about what to do about an existing co-owner's share of the house. The shares may be purchased by remaining co-owners. It could be in tenancy in common or joint tenancy, depends how it is set up. Again, a lawyer is the best person to advise you about this. So all these points that I have posted here, they are basically to give you a broader idea of the things to keep in mind and take them with your solicitor. So how the co-ownership process works? It is same like for every buyer. You like a property, all of you together, it fits your needs, then you just buy it. Of course, stable for everyone. And affordability consideration will be like for anyone, purchase, mortgage, and if it is a corporation, you must meet financial institutions guidelines. Renovation and repairs needed, you have to factor that cost, ongoing maintenance, cost of acquiring and disposing of the real property. So all these things you will think about carefully. Purchase price, mortgage, meet financial institutions guidelines, renovation and repairs, ongoing maintenance, cost of acquiring and disposing of the real property. Use a real estate professional to guide you through the process. It is a body of multiple bodies that will work with the bank, with the real estate broker or agent. So you must get an independent legal advice as well if this is the right fit for you. Because knowing the details of the contract and your future obligations must be fully understood before you put your Johnny Hancock on that, right? Let's talk about some common issues and solutions. The issue, default on mortgage payments, joint and several liability. So this is major issue. If you default on mortgage payments, it is a responsibility for everyone. Nobody can just skip. And the solution could be at least 3 to 4 months reserve fund to make sure your mortgage payments do not go under default and you're keeping your mortgage obligation in good standing. That means members will pay more money in the beginning to build that pool, which could be increased by little extra payments into a reserve fund, right? And another issue that can creep up is exit and entry. Corporate ownership may resolve the process of exit and entry. In a corporate ownership, everyone is a shareholder. If there are 5 people in a co-ownership, then without paying any extra money or land transfer tax or this or that, someone can just sell their share to another person. So they come in, this person goes out. And notice of change of directorship or shareholder is communicated to Industry Canada. That is as simple as this. But whosoever comes in, let's say you are a new entrant, you would like to see the liabilities of the co-ownership corporate at that point. It's just not like you just jump in and say, I am new member. Okay. So when someone wants to exit, they leave the shares. A fair market value of the shares is determined. Anyone can purchase that, or it could be equally distributed among all the remaining co-owners. The downside is that when you take mortgage for a corporation, the rates could be higher. But if that helps you get over other problems, which could be way bigger, then maybe corporate structure is the best structure. Evaluate it thoroughly. Okay, these are not the decision that you take with mood swings. It has to be a very well thought out plan. Now, so when you are into co-ownership arrangement, these things do apply. It is better to go for training of all these before you actually get into co-ownership and understand your obligation. And trust me, this could be serious. There could be serious repercussions if you do not obey them. Ontario Human Rights Code compliance must be there. There cannot be any discrimination on basis of all those defined parameters. Look up at Ontario Human Rights Code compliance document. And of course, any repair has to be as per building code. You cannot make arbitrary changes or take some portion of structure down and cause structural integrity problems. Shared living space, specific building, and fire code compliance that apply to boarding, lodging, or rooming accommodation applies as far as um, fire code is involved. So that means because you may be unrelated persons. So whatever applies to those kind of housing, boarding, lodging, or rooming accommodation, of course, those are free, but here it is paid setup. So make sure you are fire compliant, because if there is accidental fire, penalties could be severe. So that was all I wanted to talk about in this short presentation, and this is my contact information. Paul Cheema, I'm broker with Remax Prime Properties. You can reach out to me on my two separate lines, 333-2273, 328-3279. The first one is the last four digits are care, and the last four digits on 3279, they translate into easy. So guys, I hope this was useful to you, and let me know if you have any other question or problem. I would like to bring more information for all of you. So I'm going to stop the screen right now, and I'm back to my main screen. I really hope that you enjoyed this, and I would love to see any questions. For some reasons, the session in the beginning got terminated by itself, and I wasn't sure how to fix it, and I just restarted it. So I'm not sure if everyone got a chance to re-sign into the new arrangement, but don't worry, everyone who registered will get this link to the recording. Thank you very much. Enjoy your day. Talk to you some other day on another topic. Bye-bye.